Hello friends, hope all of you are good again. In our previous video, we discussed about basics of how income from house property and charging section number 22, in which we studied about that a person must be owner of the house property and everything, type of the house property that we have studied. Today we are going to start with section number 23, that is determination of annual value. As we studied in first lecture that if income is chargeable under the head income from house property, in that case I need to determine annual value, right? So section 23 is talking about determination of annual value. Before that, we need to understand three things. One is let out property, second is dim let out property, and third is self-occupied property. We have a little bit idea as we have studied in intermediate and IPCC. So in case of house property, there will be three types of house property. First is let out, which you have actually given on a rent or which is actually let out by assessee. Second one is deemed to be let out, and third one is self-occupied. Self-occupied property means a property in which assessee resides, or we can say assessee is using for its own residential purpose, right? If assessee is using for its own business purpose, then there is no question of income from house property, right? So in case of self-occupied property, we can say that it is used by assessee for its own residential purpose, and remaining properties will be considered as deemed to be let out properties, right? Only two properties you can claim as a self-occupied, and remaining properties, if it is not actually let out, then in that case we can say it is deemed to be let out property. Now computation of annual value. First, what we require first, if we want to compute annual value, what things we need? First, in case of let out property and dim let out property, I'm talking first, and thereafter we'll go to the self-occupied property. Self-occupied property, generally in all the cases annual value would be nil, so there is no question of computing annual value in this case, right? Now going ahead, right? Okay, now if I want to determine annual value, what things are required? I have discussed in a previous session also steps of computing house property. In first step, I require gross annual value. Gross annual value, known as GAV. Now if I want to compute gross annual value, then first thing which is required is expected rent, known as ER. Expected rent means a property can generally fetch from the market, right? So to compute expected rent, and second thing I will require, that is actual rent, that we are discussing afterwards. First, if I want to compute expected rent, in that case I need three things. One, municipal valuation, or I can say municipal rent, MV. Second, I will require fair rent, that is known as FR, and third is standard rent, known as SR. Known as SR. So MV, FR, SR, three things I required. To compute expected rent, I need to compare first two things. What? One is MV and FR. First of all, I'll compare municipal valuation and fair rent. Out of which higher amount I will consider first. And now this higher amount and standard rent will be compared. Higher amount and standard rate will be compared, and out of which lower will be my ER. So first step is over in this case. Computation of GA. Municipal valuation, fair rent and standard rent. Three things I need to compare. First of all, I'll compare MV and FR, whichever is higher, and that higher amount I will compare with standard rent, that is called SR. So lower of both the things, higher amount between MV and FR and standard rent, lower of this will be considered as what? Expected rent, that is called ER. Now second thing I require, that is actual rent. Actual rent received or receivable, that is AR. For this purpose, what I will require? I need to compute what? I need to compute annual rent what is the rental income during the previous year. Generally, how we can compute a monthly rent? In case of monthly rent is given a monthly rent into number of months. Currently we are assuming that property is let out for the entire year. Vacancy period we will discuss later on. Annual rent that I am supposed to receive less करेंगे unrealized rent. Unrealized rent means what? It's kind of bad debt that you have not received. Though property was let out, but you have not received certain rent, which is known as what? Unrealized rent. We'll reduce this unrealized rent from annual rent received or receivables, so we'll get what? Actual AR. Now step number 3, and this is final step to compute. As it's a final level and house property is not that much of weight covering, so I'm not going in depth that much, right? Majority of the chapter like business profession and capital gain and everything will cover each and every section in detail, right? So in house property I'm not taking that much of the time. Okay, first I need to compare two things in this again. First I need to compare ER and AR, whichever is higher. Whichever is higher will become my what? EA, right? Now this thing is all about let out property. Okay, in case of didn't let out property, difference is only things that there is no AR in case of dimmed let out property, because property is not actually let out during the year, so there is no question of actual rent received or receivable. So in that case your actual rent received or receivable will be nil. So automatically your ER will become GAV in case of deemed let out property, right? And in case of self occupied property, we have already discussed, it is nil. Okay, fine, let's go ahead. First, see, one by one we'll discuss this. First, let's discuss charging section that we already discussed, section number 22. Now we are coming towards section number 23, talking about determination of annual value. So first, we are computing gross annual value in case of let out property. Okay, what it says, GAV in case of let out property, GAV in case of let out property shall be higher of what? ER and AR. Okay, ER means what? ER means expected rent, sum which the property might reasonably be expected to let from year to year. So what a reasonable rent we can expect from the property if it is let out. Okay, the expected rent is higher of MV FR but restricted. The word used over here in section is restricted. That's why we are keeping lower of that, higher of MVFR and standard rent, right? So we are taking lower of these things because your expected rent cannot exceed standard rent, but it can be lower than that, right? In no case your expected rent can exceed standard rent. Okay, so restricted to SR. So in short, what we can say, higher of MV and FR and lower of 1 and SR. Now in case of municipal valuation, sometimes in question they will give you that municipal tax, that we'll discuss afterwards. Municipal tax is certain percentage of municipal valuation, right? Generally whatever the municipal tax, it is calculated on the basis of municipal valuation. So in question they might not give you directly municipal valuation, they may give you percentage of municipal tax and amount of municipal tax. You need to make reverse calculation. For example, municipal tax paid rupees 10,000 or municipal tax for that particular year is 10,000 rupees, and in additional information they have given us municipal tax is 10% of municipal valuation. So what will be amount of that municipal valuation, MV? I can find municipal valuation by making reverse calculation, that if 10% and 10,000 is municipal tax, so I can say municipal valuation is rupees 1 lakh, right? Clear? So take care of these things. Certain times they will not give you municipal tax in the question directly, they will give you municipal valuation and give you the percentage. So we need to calculate percentage on municipal valuation if I want to find municipal tax. Okay, fine, let's go ahead. ER cannot exceed SR, but it can be lower than SR, that we have already discussed. MV is a value determined by the municipal authorities. FR means similar property in the same locality would fetch, and SR is fixed by Rent Control Act. These three things I need to compute expected rent. Now going ahead, actual rent received or receivable. Actual rent received or receivable, that is known as what? AR. Now I want to compute AR. Actual rent received or receivable means rent which assessee entitled to receive if property is let out during the year, whole or part. Part of the year, it means we'll discuss that if it is there may be a vacancy or there may be a self occupation, that we'll discuss later on. Amount of AR shall not include amount of rent which the owner cannot realize. So we can say unrealized rent shall be reduced from your actual rent, or we can say annual rent. Okay. So what do you mean by unrealized rent now? If you want to claim unrealized rent as a deduction from your annual rent or actual rent, what we need to satisfy 4 conditions given under Rule 4. First of the conditions is tenancy must be bona fide. Second, defaulting tenant has vacated or steps to be taken compelled him to vacate the property. First thing, tenancy must be bona fide, there must be proper rent agreement and everything. All the terms and conditions are mentioned in it and everything. So we can say tenancy is bona fide. Second thing, defaulting tenant has vacated the property. What does it mean? That the tenant should not be in occupation of this property. Why? Because if he is not paying rent, then why you are allowing him stay in your property? And if you are not capable, right, if you are not capable of getting vacate of your property, then what you can do, you need to take some steps. You may take legal steps and everything to compel him to vacate the property. Correct? Third point, defaulting tenants should not be in occupation of other property of the assessee. Third point says second point says you must vacate, right? You must get your property vacated. Third thing says defaulting tenants should not be in occupation of other property also. For example, if Mr. X is a landlord and Mr. Y is a tenant, Mr. Y is not paying rent for house property which is taken on rent from Mr. X, right? But is regularly paying rent for the office is also taken from Mr. X. So how can it be possible, right? If the same person is not paying rent for your house property, but same person is paying rent for your office, so it should not be possible, right? So there may be some question may be raised on bona fide, that we can say tenancy must be bona fide, so there may be some question arise, right? So in that case you will not be allowed to reduce your unrealized rent. The fourth is assessee has taken legal steps, or you need to satisfy assessing officer that if I could have taken the legal step, but it would be not worthy or it would be useless. Okay? These four conditions we need to satisfy. Then one example is given. So in house property, as I've said, that I will not give that much of the time because it is not at all required. You need to compute question on your own. If any doubt, you can connect with me. In that case, we'll solve. Okay. GAV in case of self-occupied property, as we have already discussed this case. Self-occupied property means what? A property which is used by the assessee for its own residential purpose. Now, as I said that I can mention only two properties as a self-occupied property, and remaining property, if it is not actually let out, then we can say it's deemed let out property. Correct? Let's go. Where the property consists of two houses. Earlier, only one house was allowed as a self-occupied, but now benefit is extended to two houses from Finance Act 2019. Or part of house which is in the occupation of owner, self-occupation we can say, for the purpose of his own residence. On residence, right? Not on business, because if it is on business, then there will be no question of house property arise at all. That we have already discussed in previous video. Or cannot be actually be occupied. First case, I am actually residing in that particular property, I am using it for my self-occupation. Second, I am not actually residing it, or there is not I am not in a occupation of that particular property. Reason what is the reason? Reason is cannot actually be occupied by the owner by reason of fact that owing to his employment, business or profession carried on at any other place, and he has reside at that other place in a building not belonging to him. For example, I have my business and profession, everything in city of Ahmedabad. Now, say I have house property in Baroda, and there are two houses in Baroda which I am owning. Now, what happens? I am living in Ahmedabad. I have my business, profession and everything is set up in Ahmedabad. So, by reason of that, I cannot occupy the property which is in Baroda. And second condition is what? I should not be living in the property where my business and profession is carrying on, which is owned by me. It means in Ahmedabad, if I am living, then property must not belong to me. If the property, I have already property in Ahmedabad also and I am residing in that property, then I cannot say the property which is in Baroda is self-occupied property. I cannot declare that property as a self-occupied. Clear? Right? So two conditions is there. One, I am using it for my own residential purpose, and second, I am not able to occupy that property for my residential purpose because of my employment, business or profession is set up at another place, and I am residing at that other place in a building which is not belonging to me, right? Gross annual value in case of self-occupied property is nil, and such benefit is only available to individual and HUF. No other person can get this benefit. Company cannot have self-occupied property, firm cannot have self-occupied property. Self-occupied properties is benefit only for individual and clear. Provided such properties are not actually let out during the year whole or any part of the year. See, this is important. This property is not actually let out during the whole or any part of the year or previous year. Means what? If I have let out my property for a single day, then in that case I cannot get benefit of self-occupied property and GAV is nil, right? So even if it is given for a single day, then I cannot get benefit. Clear? Then what happens if I have given property 1 month, 11 months I am occupying for the self residential purpose, and 1 month I have given on a rent? What will be the treatment in that case? That we'll discuss later on. Okay. Now one question is given to you. Under section 22, a HUF owns a property which has been let out to a firm carrying on business. The firm, HUF is a partner of the firm through its karta. No rent has been charged by HUF from the firm for use of premises by the firm. The AO however taxed the HUF on the notional income from property based on municipal valuation. Is this decision justified? First, what happened in this case? First is, say HUF is there. HUF is a partner in a firm. HUF has given his property. HUF has given its property to this firm to carry on business. Okay, this is the scenario. An assessing officer considering this property as a house property and taxing income on the basis of municipal valuation. So is this correct action taken by assessing? As we have discussed in first session, that if assessee is using property for the purpose of carrying on its business, then it cannot be considered as a house property at all. Okay, now see, under section 22, annual value of the property is chargeable to tax under that IFHP in the hands of owner first. However, this section specifically excludes property occupied for the purpose of own business or profession of the assessee, the profit of which are chargeable to income tax under PGBP. What does it mean? It means that if I'm using any property for the purpose of carrying on business or profession, then such property cannot be considered as a house property. right? And it is out of the purview of this head IFHP. In CIT versus Sri Champalal Jivraj, it was observed that where the Karta of the HUF is a partner in a representative capacity means what? Actual partner is a Karta, but actual partner is a HUF and Karta is representing in a form this HUF. And the firm occupied a portion of house property belonging to HUF. The benefit of exclusion under section 22 was available to the HUF. Hence, income from said property shall not be chargeable to tax under the head IFHP. Therefore, in this case, action of the AO is not correct, right? So, in the given case, what happened that HUF has given his property to carry on the business and profession to the firm in which it is a partner, right? So in that case, court has given this judgment that HUF can also get this benefit if it is property used by for the purpose of business. Then in that case, we can exclude such property from the purview of income from house property. So contention of assessing officer is not correct in this case. Now, gross annual value in case of deemed let out property. We have already discussed this thing. In case of deemed let out property, there is no actual rent because the property is not actually let out. So there is no question of comparison expected rent and AR. Okay. So in case of deemed let out property, GAV would be what? Expected rent. What it says, see. Where property referred to in subsection 2 above. Subsection 2 means what? Here it is. Self-occupied property. Consist of more than 2 houses. The provision of that subsection shall apply only in respect of 2 of such houses. It means I can declare maximum 2 houses as a what? Self-occupied properties, which the assessee may at his option. Means it is optional for assessee to choose which property they should declare as a house let out, as a self-occupied, and which property they want to declare as a deemed let out property. Even if assessee is not actually using for its own residential purpose, and if it is not actually let out, then even if assessee can declare that property as a what? Deemed let out property, or he can declare it that property as what? Self-occupied property. Correct? So it is option with the assessee which 2 house wants to declare as what? Self-occupied property, and remaining houses will automatically be what? Deemed let out property. Annual value of those houses other than house in respect of which assessee has exercised an option shall be determined under subsection 1. Subsection 1 means what? That GAV in case of let out property. So annual value shall be computed as if property is let out. It means assessee can choose any 2 property as self-occupied property and others shall be treated as a deemed to be let out. And GAV in case of DLOP is R. As I already said, there is no question of actual rent received or receivable in this case. Okay. Now I have computed gross annual value. Now I need to compute what? Net annual value, NAV. So if I want to compute NAV, then 2 things are required. First is GAV that we already discussed, and second thing is municipal taxes. Okay, so GAV less municipal taxes actually paid. DLOP case also GAV less municipal taxes, and in case of self-occupied property, GAV is nil and municipal tax deduction is not allowed. So I can say that in case of SOP, self-occupied property, my gross annual value would be nil, right? That we have seen in the first lecture also. I have discussed it with you. Here it is. See, a year of ERAR, only ER, and nil. municipal tax allowed if it is actually paid, allowed if it is actually paid, and not allowed, hence nil. And net and nil value is what? Nil, a minus b and a minus. Only these steps you need to remember. Very easiest chapter in this case. So now let's go ahead. Now municipal taxes. The word used there, if municipal taxes is actually paid, it will be allowed as deduction. See, tax levied by any local authority, then deduction shall be available in previous year in which actual payment is made, irrespective of your accounting treatment, whatever. In accounts, if you are following accrual method, then it is fine. If you are following cash method, then it is fine. But in case of income tax, if municipal tax is actually paid during the previous year, then and then it will be allowed as deduction. Let us take one example of this. Municipal tax. What used is there? It is must be actually paid during previous year. Let's take one example. Say previous year 2016-17, previous year 2017-18, previous year 2018-19, previous year 2019-20. Municipal tax payable, or I can say amount of that municipal tax for that particular year was, say, say 15,000 each and every year was there. Every year I need to pay municipal tax of rupees 15,000. Now I need to compute what? Actual payment. Amount actually paid. For example, in previous year 2016-17, I have paid municipal tax of rupees just 12,000, and 3,000 of particular year was payable. In accounting, I have claimed total 15,000 as an expense and shown 3,000 as what? Payable or outstanding. So according to income tax, right, only 12,000 would be allowed, only 20,000 would be allowed, so that I can claim deduction of only 12,000 rupees. I cannot claim deduction of 15,000. Why such provisions are introduced? One another section we will see in case of business profession, that is 43B. Why such kind of sections are introduced? Because if assessee is given some incentive, or if such kind of provision is introduced, then assessee will be inspired to make payment to get deduction, right? And revenue of the government, that municipal authorities and everything, will be released on time. Okay. Now, if assessee want to claim deduction, he need to make payment, right? Now, in this year, he will get deduction of rupees 12,000 only. In 2017-18, he has paid nothing, nil, paid nothing. So what amount of deduction will be allowed during the previous year 17-18? Nil. In 2018-19, he has paid entire municipal tax which is remaining to be paid. For example, it will be 3,000 of 2016-17. He has paid 15,000 of 17-18, which is not paid but is paid now. 15,000 of 2018-19 also paid, and 3,000 of 1920 is also paid. So total during the year previous year 2018-19 he has paid 36,000 as a municipal rent. So he can claim 36,000 total during the previous year 2018-19. Okay, here. And in 2019-20 he has paid rupees 12,000 and the 12,000 will be allowed. So whatever the amount of payment we need to just see. Okay, let's go ahead. Very simple. Municipal tax must be borne by assessee. If tenant is paying municipal tax of that particular property, then owner will not be allowed such kind of deduction because actually is not making any payment. Okay, even if arrears of preceding previous year is paid during the previous year, it will qualify of deduction in previous year in which it is paid. In case of property situated outside India, then such case, if such property situated in London and local authority of London is also levying tax kind of house property, municipal tax, then such kind of tax shall also be allowed as a deduction, right? Because in first lecture we already discussed that even if the property is outside India, then such property shall also be considered under that income from house property. Okay, so this is all about determination of NAV. Certain special cases that I said I will discuss later on, that about the vacancy and self occupation and everything. Okay, so now we'll discuss this certain cases in our next video. So thank you so much guys.